Hey guys, welcome back to another video. Today we'll be taking a look at Rockwell Automation. So as always, starting off, we're going to look at their PE ratio. It's currently at a 33, which is not the best, as you ideally want this to be at 20 or less. Now, seeing if they offer any dividends, they do. They currently have a yield of 1.58%, which comes out to about $1.12 per share. It's always nice to see a company give back to their investors when given the opportunity. Now, before we get into their income statement, I want to see what their gross margin and return on invested capital is. So their gross margin is currently at 47%, which is good to see because the lowest you want this number to be is 20%. Then with the return on invested capital, it's solid at 28%, as you want this to be at 7% and above. Getting into the income statement now, we're going to start off by looking at the revenue. As in the most recent year, they're bringing in $7 billion, which is up roughly $690 million from 5 years ago, so this is great to see. If you ignore 2020, it's basically been steady growth. Now, checking out their net income, it's looking very similar to the revenue. It just has a tiny dip in 2018 instead of 2020 this time though. Last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. And as you can see, it's looking great. Overall, they brought it down to 116 million from 128 million. Moving into their balance sheet now, we're going to take a look at their current assets. So the current asset growth does not look good as they brought this down to 3.06 billion, which is a decrease of about 31% from 5 years ago. Now with the current liabilities on the other hand, as of 2021 they're at 2.99 billion, which is nice to see as they have 70 million more current assets than current liabilities right now. The last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies have a lot of money on hand, have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. And as you can see, it's looking decent. Overall, they are up from 2017, but they are not showing me the consistent increase every year that I want to see. In conclusion, Rockwell Automation has some really solid financials. Some things I would like to see fixed going into the future is they need to have more current assets than current liabilities, and I want to see more consistency with their cash flow statement. When it comes to buying the stock, I would try to stick around the $280 range ideally because the PE ratio being in the 30s does mean the earnings can't fully justify the price it's trading at right now. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching, and have a nice day.